In this video, we are going to discuss about the morning star pattern. Morning star is also one of the most popular patterns. The morning star represent the bullishness in the market, or we can say that the new buying will come in the market. Now, here we can find out this morning star pattern when market is in the downtrend and also market is at support level. There is a high chances that we can depend on the morning star. Means if we can see the morning star in the falling market and at the support zone, that means there is a high chances that market will change his sentiments towards the positive sentiments, and it will start moving upside. That's the goal of morning star. Why it's called as morning star? Because it will convert downtrend into uptrend, just like a morning. Now, how this pattern look like what pattern represent and how pattern is look like. See here, if you see this types of candle, then it's a morning star. Why it's morning star? Because in the morning star you will see you can see one red candle, a big red candle. We can say that selling candle or bearish candle. Then you can see some doji candle or spinning top or hammer is also fine. But the case should be it will not break this hammer or whatever the candle support, whatever the candle low or the support zones. Now if you once find out these candles, and if the next candle is a green candle, that means it's a sign of morning star. What we can say that we find out the morning star. Right? Now hope it's clear for you. Now again the question is how we can trade by using this morning star. There are total 2 potential ways to trade in the morning star. Let me explain you again. There are total 2 ways to trade in morning star. First way is, as we discussed, high breakout, means the candle high breakout, morning star candle high breakout. And second is, after seeing morning star, just wait and check for the swing breakout. Now you can ask me what is meant by swing. Just bear with me for a minute. I will explain you what is meant by swing breakout and what is meant by high breakout. Let's start from the high breakout first. Okay, what is meant by high breakout? As I am saying from the first video of the candlestick, when you see this type of pattern, this red candle, this some doji or spinning top or hammer candlestick, and then it's a confirmation candle. After seeing this one, you can just mark high, whatever the candle, either it is, if green candle is high, then mark a high of green candle. If red candle is high, mark high of red candle. Mark low of this candle. Put stop loss at the low, and whatever the candle is crossing this high level, you can just make an entry here. That is the first case. But I am personally not going for this case. The reason is, whenever I gone through this case, or I gone through this stage, most of the time I faced losses. I will tell you the reason. The first loss is because market is giving the morning star pattern, but again it starts reversing from here and it is hitting my stop loss. That problem I am facing. So what is the correct steps to trade with the morning star? This second one. What is the second one? Is swing breakout. Now what is meant by swing? Now see, this is the swing, this U, or we can say that this is the pattern, and this is the swing, this is the swing. Whenever market took support or resistance, it's a swing. For example, here in uptrend it's a swing, this one is also swing, this one is also swing. The U-shaped pattern or just cup like pattern, inverted cup pattern, right? This is also swing. Now how to trade with this one? Let me show you in detail. Just a minute. How you trade this one? What we need to do? We just need to mark swing high, the last swing, whatever swing we have seen, and the low of the market. Obviously your stop loss will be here, and obviously your entry point is here, entry point. So whenever market break this swing, This swing is too much important, because from this swing selling start, from this swing selling start, from this selling start. That means whoever sold here, their stop loss is here. Whoever sold here, their stop loss is here. Whoever sold here, their stop loss is here. That means when market got here and start buying, obviously they started shifted or trailing their stop loss, and their stop loss is around here at these levels, somewhere around these levels. So what will happen is, whenever market breaks swings, whoever sold, they need to buy, right? When they need to buy, again buying will come and market will move upside. So this is the one of the best case which I ever found in the Morningstar. Trade in this case, so that you will easily get a safe trade, very safe trade with the high winning ratio, right? You just need to observe the market every day and break out on high instead of breaking out on these candles. Like entry price is here, better to enter at this swing breakout. This is the good strategy for the Morningstar. Now let's take a real time example on the real charts. Just a minute, I'm opening the chart. Now I already shortlisted the Morningstar for you. If you check here, this one is red candle, like selling candlestick. This one is hammer, or we can say spinning top. Now just mark a low. Okay, just mark the low of the candle, put stop loss here. This is obviously, this itself is a swing, right? Because of its big candle, this itself is a swing, because market took resistance here and selling happened. The last swing we need to check. Now what I can do is, I can mark the high of this part, and I will make entry here and put stop loss at least here. Once I put stop loss here, if I make entry here, if you check, see, market moved a lot from this point, like again I'm marking from this entry point to this point. Market moved a lot until resistance level. So if you check the trend from the morning, only trend is negative, and this is the support area. Why it's support area? As I discussed in last video, because market took support from here and trying to move upside. That's why first time market took support, move upside, but not able to sustain. Again try take support and move upside, but this time market have broken this swing. That's why whoever sold here, whoever sold at this candle, their stop loss must be here. If they are whoever sold here, so because of their stop loss got hit, the seller's stop loss hit, that means buying will come. If buying will come, obviously market will move, start moving the upside. That's the logic behind the Morningstar. Hope you got my point. I hope you got my point. Sorry. Now which time frame it will work best? In my point of view, it will work best in 5 minutes and 10 minutes chart. But we need to check 5 minutes, 10 minutes plus support zone. If these combinations are there, then it's a perfect trade and perfect setup. If you find this type of setup, then don't hesitate to take a risk. You can just take a risk, and otherwise you can just observe in a beginner stages. If you are comfortable with this type of pattern, then only trade. Hope you got this topic. If you have any doubt, just feel free to ask in the comment section. Thanks. See you in the next video.